Introduction. Thank you very much, sir. And good evening, all of the participants. I'm very happy now we reached 100. The
Yes.
participants scored 100. So it's a great participation. I'm very thankful for giving me the opportunity for the Institute of Chartered Accountants of India. I'm also grateful to my friend Mr. Ramaya of Pavluri Associates, who have introduced me to this August gathering. And he has given me the greatest opportunity to address all of you, the great intellectual people. And in fact, I also want to be a chartered accountant when I have completed my degree. And during those days, this is a very passionate people want to do chartered accountancy, company secretaries, and ICWS. Those are the three courses are which majorly focused during those days by the students after completion of their degrees. So destiny has brought me here as a lawyer, and I am now practicing as an advocate for the last 34 years, and with a specialization in labor laws. All the companies who are in the states of Telangana and AP, and all the outside these two states also being my clientele, and I am basically focusing on the labor laws. So now, friends, now I just as a brief discussion, the government of India has brought these four codes into force. Parliament has passed the codes, and President has also given the assent. Only the implementation date has to be notified by the government of India. From time to time, it was being postponed because of the COVID, because of the lockdowns, and because of the objections made by trade unions and also some state governments. Now, for the implementation of these codes, the state governments are also required to frame their rules. But so far, except 3 or 4 states, no other state has framed any rule. Therefore, this implementation of these codes are getting delayed. Now, the unofficial news which is going around is from October 1st, these codes are likely to be implemented. But this is the third time they are saying that it is going to be implemented like this, but it is doubtful whether from the 1st October it can be implemented or not. We have to wait and see. Now, the impact of these codes, whether is going to beneficial for the industry or for the employee, or whether the government has actually achieved what they want to achieve by making this kind of laws, is the time has to decide on this. Because now the entire labor laws which are existence from pre-independence and post-independence also, now they have revamped everything and made it into 4 codes. Now, by doing this, what they have done is mostly all the provisions which are earlier existing are just simply copied and pasted now. So therefore, majority of the provisions which are existing earlier are also likely to be continued now. Now, because of this, what the time-tested provisions which are no more required because of the industrialization, globalization, and all other new factors, those things which are becoming redundant, but still they are continuing now. The entire focus of the government while making this law appears to be is only on 5 or 4 issues. The wages, definition of wages is given in EPF Act, one kind of definition, ESI, one kind, ID Act, one kind of definition, Gratuity Act, Minimum Wage Act. Those acts are giving different meanings and different definitions for wages. So that is creating a problem. So they want to codify. The wages is like this. This is the definition for wages for the entire labor laws. So they made one definition, wages, across all the 4 codes, the same definition. Similarly, a worker, an employee, an industry. Like this, few are, and most importantly, the migrant workers. You recall, last year pandemic situation, we have seen that many of the migrant workers walking back to their relative villages, districts. So that has created a kind of havoc in the minds of the government. And they thought that they have to protect these kind of migrant workers, and they have to extend the social security benefits to all these migrant workers in this background. So the government came up with this kind of a codes without examining the actual requirements of the present businesses or present day systems. Simply copied the earlier existing provisions, and still they want to continue with the same majority of the provisions. If you see this, artificial intelligence, Internet of Things, and the CTC concept, which is not there earlier, is now everywhere in every company and industry. CTC is the rule of the day. So that is not taken care. And similarly, the employees leaving this company, joining in another company, breaking the bonds, breaching the agreements, All these things are new concepts which are not at all taken care by the governments while proposing to pass this kind of acts. They have focused only on 4 or 5 issues. Rest of the things simply copied and pasted. So therefore, with this background, I will just start the presentation, mainly keeping in view of your requirement that PF, ESI, gratuity, bonus. I have prepared a presentation basically on those issues. And now because of this, we are only touching 3 codes. One is code on wages, social security code, and the code on IR. The other code is occupational safety and health is not relevant for you because it deals with the safety, welfare, and health of the workers. So we are not touching that code. Then the remaining all the other 3 codes I am touching with the relevant portions which are required for the present meeting or the participants which are required for you. Now friends, let us start. As I mentioned it to you, these are the 4 labor codes which are now coming into force.
Sir, you have to do the share screen.
Sorry? Sorry, sir?
You have to do the share screen. You are not done.
Okay, okay. 1 minute.
Share screen.
Yeah, I'm doing it, sir. Now it is coming, sir?
No, sir. You have to let the PPT be open and then click on share screen and click on PPT. So, using a Alt tab,
Yeah.
go open the PPT. Yes, sir. It's coming, sir. It's coming.
Yeah.
Yes, sir. Perfect.
Yes.
Yes, down you'll see one that mode like this. Click or the slideshow you can click. Anything.
Oh, sorry, sir?
You can see in the down something like this. No, it is there. Just beside that 65%.
Oh, yeah.
Extreme down. Just by that, beside 60%, click on that. Yeah, next. Okay, this is also fine. Yes, you can be as come. It's very big, sir. Just
Yeah.
yes, sir. Perfect.
Okay.
Yeah, now you can just once you click on this thing, you can keep moving the PPTs.
Okay. Now these are the 4 codes, sir, which are now going to replace all the existing labor laws. First one is passed in the year 2019 itself. The rest of the codes are in 2020. So for all these 4 codes, the government of India has framed the central rules, but the state government has to yet to frame rules, and the notification of implementation has to be given by the government of India. And these are the 4 codes importantly going to come into force after the notification date. Now let us start with the code on wages, sir. This is the first code which is passed in 2019. In this, few important provisions are relevant for all of us. And as per this code, sir, these 4 acts going to be subsumed. These 4 acts under the code of wages are going to be subsumed, and these 4 acts will not be in existence after the code come into force. The first one is Payment of Wages Act 1936. Second one is Minimum Wage Act 1948. And third one is Payment of Bonus Act 1965. And fourth one is Equal Remuneration Act 1976. These are the 4 acts covered by Code on Wages. And these 4 acts are going to be replaced with this code. And now, this code does not have any specific exclusions. It applies even for a company or an establishment where even a single employee is employed. And it also applies irrespective of the salary issues. And it has no specific exemptions for any company. It applies to everybody. And it applies to all establishments, employees and employers, unless exempted specifically from the provisions of the code. So the government of India has got the power to exempt any other organization or an establishment from the provisions of this code. And how this applicability of the coverage is to be examined, by inferring into the definitions of employer, employee, and establishment, and other relevant definitions we have to examine, then only we can decide whether this code applies to a particular establishment or not. That depends upon the inference made by basing on the definitions given under the code. But generally, for PF Act, if you require 20 employees, ESI 10 employees, Gratuity Act 10 employees. This kind of minimum number is not there in this code. It applies even for a single employee or establishment also, even though there is no major employment strength in that organization.
Sir, 1 second.
Yes.
Sir, can you just, because the heading is missing, just click on the slideshow on the top, sir. Automatic. That's it. Now it's coming, sir. Yeah, now it's coming.
Okay. Right.
Just make it. Yeah.
Is it okay now?
Yeah, you can still increase it if you can just click on the slideshow. This is visible, sir.
Okay. Okay.
Yes.
And now in this, all the 4 codes, there are certain common features. You need not examine all those things. All the 4 codes have certain definitions in common. That is, one is wages. It is common in all the codes, as I mentioned earlier. And the contract labor definition has been revised to include interstate migrant workmen and part-time workers also. Earlier, these 2 issues are not there. Now they have included this interstate migrant worker as also a contract worker. Now, exclusion of apprentices registered under the Apprentice Act from the definition of employee is common across all the codes. Now, apprentices are the only persons engaged under the Apprenticeship Act are excluded from the purview of all the 4 codes. In relation to an establishment having department or branches in more than one state, as the case may be, the central government is the appropriate government, but no such provision in IR code. Industrial Relation Code exempts that every state is the appropriate government. Whereas for all the other 3 codes, if a company is having more than one branch in another state, then the central government will be the appropriate government, which is not there in the IR code. Similarly, the compounding of offenses is also providing in the all 4 codes. Earlier, if any criminal case the department wants to file, they can simply file it. There is no possibility of compounding the offenses earlier. Now, for the first time, in all the 4 codes, they have introduced this compounding of offenses for the first time. These are the common features in all the codes. So you need not to think many ways. The things, few of them are become common everywhere now. Now the definition of wages, this is the only slide which you require to follow me, because it is going to decide PF, it is going to decide ESI, it is going to decide bonus, it is going to decide gratuity, it is leave encashment, whatever the monetary benefit is to be paid to the employee is basing on this definition of wages. Now you can see this is a very confusing, unnecessary made so many additions to this, which is simple. Otherwise, they have made it more complicated instead of making it simple. Now you can see what is the definition of wages under all the 4 codes is common. Means all remuneration, whether by way of salaries, allowances, otherwise expressed in terms of money, be payable to a person employed in respect of his employment and include basic pay, dearness allowance, and retaining allowance. These are the 3 main components under the wages: basic pay, dearness allowance, and retaining allowance. If you have to pay the wage salary, this is to be paid in this mode, in this fashion. This definition was originally available under the EPF Act. They simply copied and pasted here. But by doing so, they have made some additions, which is creating a lot of confusion now. Now you can see what are the exclusions for this definition. It does not include any bonus payable under any law for time being boss, which does not form part of remuneration payable under the terms of employment, that is the statutory bonus under the Payment of Bonus Act. The value of house accommodation or the supply of light, medical attendance, or other amenity or services excluded from the computation of wages by general or special order of the appropriate government. No, that is excluded. Any contribution paid by the employer to any pension or provident fund or the interest which may have accrued thereon, and any conveyance allowance, any sum paid to the employee to person to defray special expenses entitled on him or by virtue of his employment. House rent allowance. This is the issue which is going to create a lot of issues, because the house rent allowance is not included in the definition of wages now. and then remuneration payable under the award or settlement, and any overtime allowance, and any commission payable to an employee. And then this A to I have underlined it to make it separate because these are the issues which are now required to be reckoned for the purpose of wages. And the exemptions further are any gratuity payable to an employee and any retrenchment compensation or other retirement benefit payable to an employee. Now you will see this is the important provision. They have first, I have shown you the definition of wages, and now there is a proviso to that section which says, provided that for calculating the wages under this class, if payments made by an employer to the employee under subclass A to I exceeds one half or such other percent as may be notified by the central government of the remuneration calculated under this class, the amount which exceeds one such half or the percent so notified shall deem it to be as remuneration and shall be accordingly added in wages under this class. This is the issue which is going to create a lot of confusion. For the purpose of more clarity, I will take you to the above slide. Now, A to I, A starts from any bonus and I stops at any commission. So if A to I, these items exceeds 50%, then these will also be to be added for the purpose of wages, for the purpose of calculating the wages for the ESI, BF, bonus, and everything. It appears it is like your Income Tax Act, where that provision to be deleted, this is to be added, and this is to be connected. All these things appears to have been followed here also. And now so many items have excluded, but still if it exceeds 50%, that is to be added again. That is what now the issue will be. Hereafter, suppose I will take you a small example here. Kindly see, look at the I portion, any commission payable to an employee. Suppose a showroom of Mac or bench, where a salesman sells a bench car of high-end model. He will get roughly 1 lakh or 1.5 lakh as a commission or an incentive. So suppose if that is the case, if the commission are payable to an employee included, because it exceeds 50% of his salary, then he has to be PF, ESI, and every other things has to be calculated on that portion also. So whether it is really or genuinely it is to be added to the wages, it's not a regular feature. Whenever he sells a car, he may get that kind of commission or incentive, which may not be there. So because of this introduction of this kind of clauses, the wages keep on changing. The salary structure will keep on changing, which is practically very difficult for the companies to every month keep on changing the salaries and then paying the salaries as per this provision, which is slightly difficult, and there may be a problems in future in interpreting this clause. That's what we are expecting now. So this is the provision which have going to create some kind of a confusion in the minds of all the HR people, company managements, and including the chartered accountants. Now, for the purpose of more clarity, I just made it a small table. So on the left side, you can see the included components, basic, dearness allowance, and retaining allowance. And whereas in the right side, you can see excluded components, HRA, conveyance, remuneration under award or settlement, gratuity, bonus. These are the things excluded. And if included component is less than 50, then 50% of gross to be considered as this. Now, many companies are paying basic as 30%, HRA is another 30%, and remaining 40% is conveyance, medical, children education, city compensatory allowance. Like that, under many allowances, they are paying that salary of 100 rupees divided into so many portions. Now it is going to be stopped. Minimum 50% of the gross salary should be his basic and DA, and the rest of the 50% can be any other mode, but it should not fall in the exemptions of A to I. You have to pay anything which is separately has to be calculated, and then it is to be paid. So these are the total wage definition is mentioned like this. Now that is all wages, and I think you may have so many questions on that portion. Let us come at the relevant time after the conclusion of this program. Let us discuss all those. So any other issues, Pankaj sir?
The two questions had come.
Yeah, please.
I leave it to you, sir. Whether you want to answer it now or
Yeah,
so.
please. It will be easy for them also to, in the heat of it, they can ask.
Yes, sir. The first question comes from Mr. CA P. Jitendra Kumar.
Yes, sir.
What are the conceptual distinguishable differentiators between the old and new law?
Yeah. That's all I have mentioned it to you. Majorly, 5 new issues are focused and brought into this new act. All of the rest of the old things are still copied and pasted. So the major 5 issues they have focused on: this wages, worker, industry, migrant worker, and the social security workers for the gig workers, platform workers. Those kind of new concept of the workers are also brought under the purview of social security, only for the purpose of ESI, PF, and other things. They are not there anywhere. In the industrial relations code, they are not there. Only under social security code, few new category of employees were brought in because of the recent experiences we have because of Corona. Except that few are majorly 7 or 8. Rest of the old law is still in the old bottle. It is available in the old bottle in the same fashion with a new sticker.
And again, he asks why retaining allowance, a new term employed, is equated with basic and DA.
Sorry, sir, can you come again?
Why retaining allowance, a new term employed in brackets, is equated with basic and DA?
Yeah, that is, as I mentioned it to you, that definition was earlier there under the EPF Act. Retaining allowance generally will be paid in the seasonal industries. Suppose after the season is over, sugar, cotton, tobacco, those are the seasonal industries where after the season is over, the worker may not come back in the next season. During that unseasoned period, some amount was paid as a retaining allowance. He is only to retain them, to come back in the next season. So that portion was there earlier, is simply copied and pasted here also. As you rightly pointed out, sir, there is no necessity of keeping this retaining allowance for a software company employee or a person working in Go Airlines or India Airlines. For these people, what is the need of retaining allowance? So that's what I mentioned in the introduction itself. The law which is now they want to introduce is not according to the present day requirement. It is something old, which is may required about 50 years back. But the present day requirement does not require all this kind of old stuff.
Friends, thanks for the questions and all which are coming. I'll just take 2 more questions and then I'll leave it to the end. You have already done it. Only after the sir completes the topic, let us raise questions on that only and let us not go far. Okay, and the next question from Pankaj Chandak is that can we get one practical example for understanding the 50% rule?
Yeah, that it takes time, sir. Let us have it in the end because I have to explain you in detail what is a 50%, or otherwise if you want me to start, I can do it.
Yeah, it's fine, sir. It's fine. When you're taking up, it's fine. Then one question from Shruti Upadhyay. Does loyalty bonus qualify as retaining allowance?
No, no. Okay. Any bonus except statutory bonus are excluded. Retaining allowance is only to keep the employees come back after some time. That is what retaining allowance. Loyalty bonus is totally different and it will be paid only after the employee works for some time or he completes the work as per the given schedule. Depending upon his performance and attendance, that kind of bonuses are paid. But that cannot be equated with the retaining allowance. That's the difference.
Yes, sir. That's all for now, sir. We'll come back again.
Okay. Another 2 questions. 2 people have raised their hands.
Sir, raising hands unless they're marking the attendance. Unless they write in chat that I want to ask something. Okay. I'm just taking it there.
Right. So shall we proceed further?
Yes, sir, please.
So as I mentioned it to you, a worker definition is also slightly widened. The worker now, not only a person unskilled, skilled, technical, operational, clerical or supervisor work for hire or reward, whether the terms of employment express or implied and includes the working journalist and sales promotion employees. These are the two category of employees now newly brought into the code purview. Earlier, the working journalists, they have their own act, and sales promotion employees also, they are having their own act, which deals with the service conditions of those two category of employees. Now, those two category of employees are also become the part of the code of wages. Therefore, they can raise any issue under this code only. Now, but they does not include who is a managerial and administrative capacity and who is employed in a supervisory capacity drawing wages exceeding 15,000 rupees per month or an amount to be notified by the central government. And the code excludes apprentices engaged in the Apprentice Act. And however, it is unclear whether the trainees under the NEEM scheme, which is a Government of India scheme, or standing orders are covered under the code or not. Now, many companies employ trainees. Apprentices, they have exempted, but the trainees, whether they are exempted under the Act, because the NEEM scheme is a Government of India sponsored scheme where they have given some kind of an incentives for the managements if they engage the ITA people or any vocational courses employee persons, if they give them employment, the Government of India giving the both shades of PF and other things are being paid by the government. So that kind of trainees, whether they are covered by this code or not, is not clear. That is to be still to be declared by the government. Now, because of this definition, the new set of people are also brought within the purview of this code. Now, for the first time in the same code, worker and an employee, both are now being defined. Earlier, it is only worker. Employee in certain acts only it was there. Now they have brought both the definitions in the same code. Now here, by including all those categories, I have mentioned these red mark images, which you can see: supervisory, managerial, administrative, technical. These people are also now covered. So a manager, a general manager, a works manager, an accounts manager is also now covered under this definition of employee, and he is also entitled to the protection which are given under this code of wages. So this is the first time managers are also given some kind of a liberty to claim certain benefits under the labor laws. And it also includes a person declared to be an employee by the appropriate government, but does not include a member of armed forces. That is always there. Now, for a manager, suppose his salaries was not paid or less than the minimum wages, suppose wages are not paid in time. So those kind of managers, earlier they have to go to the civil court for claiming all their benefits. Now they can come before the court which is constituted under the Code on Wages Act. So that is a new introduction for the benefit of the managerial cadre of employees. Now contract labor is also underwent a severe amendment, and which widened the scope of a contract labor, which have increased the burden on the managements by including of this definition. Now you can see the definition of a contract labor means a worker who shall be deemed to be employed in or in connection with the work of an establishment when he is hired in or in connection with such work by or through a contractor with or without the knowledge of principal employer, and includes interstate migrant worker. But it does not include a worker other than a part-time employee who is regularly employed by a contractor for any activity of his establishment, and employment is governed by mutually accepted standards of the conditions of employment, including engagement on permanent basis, and gets periodical increments in pay, social security coverage, and other welfare benefits in accordance with the law for time being forced in such a. So, by doing so, many of the contract labor are become almost a company regular employees. So who is regularly employed by a contractor? You can see in the first portion, he does not include a contract labor if he is regularly employed by a company, and who gets a periodical increment including social security coverage. That is, if a contractor pays his workers a ESI, PF, and minimum wages, and regularly employed for a company, then he is no more a contract labor. So in such case, the so far issues regularization of contract labor in the permanent roles of the companies will be an issue. They can raise a dispute tomorrow saying that we should also be taken on permanent roles of the company. We cannot be continued as a contract labor for many years. So this is the issue which is going to create a problem basically for the public sector undertaking. How the government missed this kind of logic, we don't know. In all the public sector undertakings, the contract labor are more. Take for instance of railways. Railways is run by IRCTC. That is all a contractor according to the definition. So if suppose the workers or employees working in the IRCTC wants to become the absorbed in railways, how much is the liability for the railways? So similarly, all the public sector, take for instance of airports. Airports is mostly run by outsourcing agencies and contract laborers. So if those people are wants to absorbed by the airports, how it can be manageable? Whether it is viable for the management to absorb this kind of number of employees. So these are the issues which are going to create a problem in future because of the amendment to this definition. So we have to wait and see on this. So the minimum wages is also going to create a slightest problem. No employer shall pay to any employees wages less than the minimum rate of wages notified by the appropriate government. Now it is, if it is in more than one state, it is the central government. If it is in only one state, the state government will going to notify the minimum wages for that particular state. For the purpose of fixation of minimum rate of wages under this section, the appropriate government shall primarily take into account the skill of workers required for working under these categories, like unskilled, skilled, semi-skilled, and high-skilled, or geographical area, or both. And may, in addition to such minimum rate of wages for certain category of workers, like take into account of their arduousness of work, like temperature or humidity, normally difficult to bear, hazardous occurrences or processes, or underground work, as may be prescribed by that government. And the norms of such fixation of minimum rate wages shall be such as may be prescribed. Now, the government of India is going to declare a floor wages. No government, no state government can fix the minimum wages less than what the floor wages declared by the government of India. So this is there was a proposal to do like this, but the wages is within the domain of the state governments and the labor is in the concurrent list. The state governments are so far declaring the minimum wages for all the employments which are covered by the Minimum Wages Act. Now the government will declare a floor wage for all the across the country, for everybody. This is the floor wage by the central government. The central government shall fix floor wage taking into account minimum living standards of a worker in such manner as may be prescribed, provided that different floor wages may be fixed for different geographical areas. The minimum rates of wages fixed by the appropriate government under Section 6 shall not be less than the floor wage, and the minimum rates of wages fixed by the appropriate government earlier is more than the floor wage, then the appropriate government shall not reduce the minimum rates of wages fixed by it earlier. The central government may, before fixing the floor wage, obtain the advice of the Central Advisory Board and also consult the state governments in such manner as may be prescribed. Now the central government will fix the floor wage, and the existing wages cannot be reduced after the floor wage is decided by the central government, and the central government will consult the state government before fixing the floor wage. That's all about the minimum wages under this code. So any issues, sir? Pankaj sir? Some questions are likely to pop up.
Yes. What is meant by regularly employed in contract labor exception?
Regularly employed by contractor.
Yeah. What is meant by regularly employed in contract labor exception?
Yes. So regularly employed means, suppose in a company, you have a gardener, you have a catering, you have a housekeeping. These are all regularly there in the company every day. So that those are the people regularly employed. So occasional employment, suppose loading and unloading. Suppose today a truck may come, tomorrow that may not come. So they are all not regular. So regular means housekeeping, gardening, security. Those are the people who are regularly employed in company through a contract. That's the definition, sir.
And one more question from Aditya.
Yes.
For computing minimum wages whether wages as per labor code needs to be seen. Example, whether HRA will be excluded for computing minimum wage.
Correct. Yes, sir. As per the labor code only we are discussing. According to this code on wages, HRA is excluded. Now, basic DA should be 50% on the gross wages. You can pay in any mode. Minimum wage, suppose 100 rupees, you have to pay 100 rupees as a minimum wage. Out of that, 50% should be basic and DA, and remaining 50 you can pay it any other allowance. That is the now the refined definition of the wages.
And in fact, Kiran Kumar's query of 50% understanding, we will take it at the end.
Yeah.
I'm just taking one question by Mr. Jitendra Kumar, which, sir, I think I leave it to you whether you want to cover it now or at a later point of time. He asks, what are the major controversy that comes to rest with the new code? And what new issues that need attention from your perspective? Any specific issues for specific industry? If you want, we can hold the question and come back at the end, or you can answer.
Yeah, it is more general, sir. We will discuss at the end of it.
Sure, sir. Thank
Definitely, sir. You just keep a note of it, sir. We will.
Yeah, I'm keeping it open, sir.
Yeah. So,
yeah,
we will go to the next slide, sir. So these are the minimum wages. Just for an example, I just made some small slides, sir. Minimum wages as notified by the government as an illustration. Suppose 9,000, 3,000, total is 12,000. Now, as per this code, the minimum wage act on the left side, you can see, you can give HRA 12,000 rupees, basic and DA is 4,000, so 12,000 you are paying. Now, once this code comes into place, HRA is not included. Now 9,000 and 3,000, total 12,000 you have to pay without HRA. That is how the new code is going to operate because of the exclusion of HRA from this code, definition of wages. So this is the new concept hereafter, sir. So time limit for payment of wages. In the beginning, Pankaj sir is also mentioning about this. How can we do the settlement within 2 days and other things? This is the relevant portion, which is earlier there under the Payment of Wages Act. Now just they have a small modification they pasted here. The employer shall pay or cause to be paid wages to the employed engaged on daily basis at the end of the shift every day. If the shift is from 8 to 2, at 2 o'clock while he is going home, we have to pay him his wages. If he is engaged on weekly basis, on the last working day of the week, that is to say before the weekly holiday. If he is engaged on fortnightly basis, before the end of the second day after the end of the fortnight. So this is the new time limits which they have introduced. And for the monthly basis, before the expiry of the 7th day of succeeding month, where an employee has been removed or dismissed from service or retrenched, has resigned from service or become unemployed due to the closure of establishment, the wages payable to him shall be paid within 2 working days of his removal, dismissal, retrenchment, as the case may be, his resignation. So this is practically very difficult, and I don't think any company can follow this provision, because the employee, once he resigns, suppose, he has to submit the property, which is his ID card, his laptops, his access cards, and everything which is in the custody. He has to submit, and then there will be no due certificate from the concerned departments. Then only his settlement can be done. Now, if within the 2 days, if the company has to settle all his accounts, it's practically very difficult. And moreover, if the salaries has to be paid every day at the end of the shift, means they have to keep cash or checkbooks or any bank transfer forms ready. And at the end of the shift, the people should keep on doing this kind of payment of salaries, which is practically very difficult. And how the government has missed the practical problems which is going to be faced by the employers because of introduction of these issues is not known. Unnecessarily, this kind of issues have been introduced. Now, this is a very difficult proposition the government have failed to consider. Now, the third point, sir, which we have to see is bonus calculation. because as per our agenda or for the topic, this is one of the bonus is also our agenda now for today's discussion. Therefore, I have mentioned this also. Even though the bonus calculation, minimum, maximum bonus are retained and other provisions are retained, there is no change, sir. Everything is the same. But the guiding schedules for computation of gross profit, that is first and second schedules, sums deductible from gross profits, that is third schedule, and set of fourth schedule have been dropped. But rules framed on this aspect. This is going to be almost the schedules which are now coming back by way of a rules instead of a schedule. Now they are copying it and pasting it as a rules by the central government instead of calling it as a schedule. Now it is as a rule. It is again going to be there in the books. And the power to describe the guidelines now rests with the central government. That's what the government is, central government only. No state government has got the power. The central government is now coming with the guidelines, how to calculate the bonus, what is the maximum, what is the minimum. Everything is going to be re-notified by the government of India after some time. Now fines is now an issue which is to the disadvantage of the managements. They have introduced this clause, which is earlier is not there. Suppose an employee absconds from work or absent from work, the management has got the power to impose a fine for his late coming, suppose sleeping on duty. For all these things, there was a provision to impose some fine on the employee. Now that imposition of fine is becoming very difficult because of this amendment in this code. You can see no fine shall be imposed on any employee save in respect of those acts and omissions on the part of the employer with the previous approval of the appropriate government or such authority as may be prescribed. Importantly, no fine shall be imposed on any employee until such employee has been given an opportunity of showing cause against the fine or otherwise done in accordance with such procedure as may be prescribed for the imposition of fine. The total amount of fine which may be imposed in any of the wage period on any employee shall not exceed an amount equal to 3% of the wages payable to him in respect of that wage period. And now, no fine shall be imposed on any employee shall be recovered by him in installments or after the expiry of 90 days from the date on which it imposed. So, what exactly is boiling out is 3%, more than 3% of his wages we can't impose, and it cannot be beyond 90 days. So, a minimum or very, very nominal kind of fine can be imposed on an employee, not in proportionate to the gravity or misconduct which the employee has committed. It is giving a nominal power to the employer or management to take action against an employee who has committed some kind of a misconduct. We can't impose any fine on him, which was earlier not there. Now they have introduced this kind of a provision, curtailing the powers of the employer or management not to take any action against the employees. That is one important issue which has introduced in this code. Now for the chartered accountants, sirs, you have a small problem here. The trade union can ask the details. Under the Payment of Bonus Act, where an application made to the authority or the appellate authority or the tribunal or arbitrator as the case may be, by any trade union being party to the dispute as the case may be in appeal, or where there is no trade union, by the employees being a party to a dispute, requiring any clarification relating to any item in the balance sheet or profit and loss account, then such authority or the appellate authority or tribunal or arbitrator may, after satisfying itself, issue such clarification if necessary, and by order direct the employer or the company to furnish the trade union or the employees such clarification within such time as may be specified in the direction, and the employer or the company shall comply with such direction. So any items which you have mentioned in the profit and loss account and the balance sheet is now can be questioned by an employee or by a trade union. And if any direction is given to produce those details, the company shall, no option, they have to produce such details to the such concerned authority. Now, earlier to this, sir, under Section 23 of Payment of Bonus Act, there was a presumption. The accounts and the balance sheet audited by an auditor presumed to be correct unless something is shown wrong. So that presumption has protected several litigations. It is once audited and certified by an auditor, it cannot be questioned unless you show some malafide or some kind of wrongness in that correction. So that kind of presumption is now taken away. It is now every Tom, Dick and Harry can question this is wrong, that is right. So now, if such kind of questions are made, it is very difficult for the companies and employers to explain or produce those records before the authorities and to satisfy them. It is an unnecessary amendment which has brought in for the reasons best known to the government. So this is going to create some kind of an issues, particularly where the unions are very strong. They will take advantage of the situation. For every small thing that they will raise a dispute, and the litigation will go up. So this is one interesting amendment, which is affecting the chartered accountants profession also slightly, because you will have more work now. So the offences and penalties are also abnormally increased and compared to the existing things, existing provisions. It is abnormally increased. One is, no court shall take cognizance of an offence punishable under the court without any complaint by an officer of authorized on his behalf. That is, a government officer, a labor officer, or somebody can file a complaint, or by an employee, or by a registered trade union, or an inspector or a facilitator. So earlier, the workers or the trade unions have no power to prosecute the employers. They can give a complaint to the commissioner, labor commissioner, or labor inspector, whoever. They can file a complaint against the management, they can prosecute. Now the powers are given to even an employee or to a registered trade union. Those people also can prosecute a managing director or a chairman or a general manager, and they can be required to stand before a magistrate court now. This is one new thing which they have introduced. And the inspector cum facilitator shall, before initiation of prosecution proceeding for the offences under this clause or subsection, give an opportunity to the employer to comply with the provisions of the code by way of a written direction, which shall lay down a time period for such compliance. And if complaint is lodged by a worker or a trade union, no such opportunity to be given to the management. So if a labor commission inspector is filing a case, he should give an opportunity to the employer, you comply this within the stipulated time. If it is complied, the case can be dropped. But when the worker or a trade union wants to file a case, no such prior notice is required to be given to the management. They can simply and directly lodge a complaint before a magistrate court alleging the violations against the company. If the employer complies, the inspector cum facilitator shall not initiate such prosecution proceedings. So this is one thing, is before the government officer files a case, an opportunity is there for the employers to comply, which was not there earlier. And for the first time, the composition of offences is also introduced in all the courts. On all 4 courts, the composition or compounding fee can be paid and the cases can be closed. Every officer shall exercise powers to compound an offence subject to the direct control and supervision of the appropriate government. Every application for the compounding of an offence shall be made in such manner as may prescribe. Offence can be compounded before the institution of any prosecution. Where composition of offence is made after the institution of any prosecution, such composition shall be brought to the notice of the court, and on such notice the composition of offence being given, the person against whom offence is so compounded shall be discharged. Under 2 stages it can be compounded. Once, even before filing of a case, and even after filing of the case, when the matter goes before the trial court, there also the compounding fee can be paid, and the person who was involved in this case, he will be discharged. He will not be convicted or he will not be acquitted. He will be only discharged from that offence if the compounding fee is accepted by the government. That is what. And now, one of our friends have asked, what is the consequences of this? Now you can see the misuse of the powers. As we have discussed, the powers of the inspectors are now conferred on the employees and the registered trade unions, which is not at all warranted. I will take 1 minute of your time because about 15, 20 years back, the unions set it rampant and unions used to dictate the terms to the management. Whatever the unions have said, that is to be followed. Otherwise, there will be no production, there will be a strike, there will be manhandling, there will be murders. Those things have happened and all the industry have witnessed that. Particularly take instance for Maharashtra, Bihar, where the trade unions leaders are so powerful. And also they become MLAs and they become ministers and some of them become labor ministers. So they used to dictate the terms to the management. And because of the trade union activism, many industries have closed. That was the experiences this country has faced. In spite of that knowledge and background, still they have given this kind of powers to the union leaders and then employees. It will lead to, again, retrograding. We ourselves is going back from this progressive state. Now, in view of this provision, any employee trade union can file a complaint before the court for prosecuting the employer. And now it is not confined to one segment of the employees who are drawing wages below 24,000. That's why I have mentioned it to you. There are no worker and an employee. Employee who is a managerial cadre employee also can file a complaint now against the management and prosecute that company. Any employer or worker can prosecute the employer, which is not the procedure existing now. As I mentioned, it is not the practice. Only the labor department officials or the ESI department or the PF department, those officials can prosecute the companies, not the employees or the trade union leaders. So this is going to create some kind of a problem in future for us. So
has it become the law, or still some representations can be given, sir? Because it is very demoralizing when the Prime Minister talks about getting Atmanirbhar, start the industry, start your own business, and when you're giving such type of powers to workers, and we know that even a fight with a wife will be taken out on the employer in the company. So such things, are they the law, or can we still have
no, sir.
some...
These codes are already passed by the parliament, both the houses. President has given assent. That is also over. Now the implementation date has to be given. That's all. From what date it will come into force is to be declared. Everything is done. Now options are, it will be going to be struck down by courts tomorrow after once the act is passed. And many people like me are ready to file cases. We are also draft petitions are ready. So once it is now notified, there will be a lot of litigation on all these points. And state governments are not happy with this. That is only one consolation. The state governments, many of the state governments, including Andhra and Telangana, they are not ready to enforce this. Therefore, they are not preparing their rules for this. So therefore, it is getting delayed, but it can be delayed, not avoided. That is the only thing.
Sorry to disturb you. You can
No, sir. Lastly, we come to the conclusion part. The codification of law, therefore, makes huge promises and fails to secure their realization, as we mentioned, and as you rightly pointed out by Pankaj sir. It makes huge promises, but secure to fail their realization. Fails to incorporate long pending demands of workers and management, and also it does not broaden the frontier rights and also dismantles the long established institutions. For the 50 years, 1947 onwards, the institutions are working. Those are now going to be dismantled. The wages definition runs into 49 lines. That's what I mentioned it to you. If any definition requires that kind of elaborate, complicated writing, you can simply say this 50% should be your wage, and out of this is included. All others are not included. So some way it should be simple and clear to the people, but you cannot complicate the things and more confusing. 49 lines definition. Is it required? Unnecessary things. Even British people have not taken that kind of things to make it complicated. Now a worker definition runs into 23 lines. Is it so complicated to define a worker? So that it has also done like this. In the process of to introduce the provisions, it has diluted the existing labor laws. It had neither legal sturdiness nor a social vision. In the passage of Code 2019, is any indication that it does not going to inspire much confidence about the other codes also. We are not getting any confidence that will help us either for the management or for the employee or for any other person. If this code is going to help anybody, no, that confidence is not going to be created by this kind of code. So that is all for the time being. This is all the conclusion on the code on wages. And also I will show you some flip sides of this. The flip side, most of the substantial process of those laws continue to exist under the code on wages now. To that extent, any exercise may be viewed largely as a consolidation of laws rather than a true uniform. Instead of we carrying 35 or 36 books, now we are carrying 4 books. It is all consolidation of law. It is not a reform. The books are now morely 4. Except that there is all the old sections provisions are still continuing. For example, the code on wages applies consistently all kinds of establishments like small size, medium size, large size. And the definition of wages be further simplified to reduce, hopefully eliminate any litigation surrounding the complex definition. As somebody asked now whether retaining allowance is necessary in the context of the wages system. Now in the present day system, retaining allowance is required. Should the women workers still face the discrimination, including factors such as age, marital status, etc.? That is under the Equal Remuneration Act, that provision was there. Simply creating one law by merging 4 labor laws and reducing compliances is unlikely to address the larger problems such as growing unemployment, the skill shortage in India, and never-ending litigation. These are some flip sides which the government have failed to consider after passing these codes after about 50 years of the independence. So they have failed to achieve what the object which they want to achieve by making this kind of laws. That's all. First, we have touched one code, sir. We are going into the second code from here. So exactly we are going by time. 1 hour I thought we can take for code on wages, and the next 2 hours we are going to deal with this social security code. In this, not, yes, sir.
From our side, don't worry about the time, sir. You are just bang on, making us take note of these important factors also. So thank you very much, sir. Don't worry.
The participant should not feel bored. That's what my worry.
No, sir. I don't think so, sir. I'm getting good reviews now.
Thank you. Thank you. Let us go to the Social Security Code. In this, if you look at it, the Social Security is usually understood as some form of monetary support that the government provides to those who are either incapable of being employed or inadequately employed. For them, generally, the Social Security is provided. In Indian context, the Social Security has surprisingly a different meaning. We don't feel a free education, free hospitalization, free medication. Those things are not known to the Indian public like any European or American countries have. In India, Social Security has spanned over a multiplicity of labor laws that state and central government have implemented over the course of many years. And many state governments have not yet framed the rules for this code. Okay, that is a different thing. But so far, the Social Security in India, if you largely look at it, very few. ESI, EPF, maternity benefit, gratuity, workman compensation. Like this, hardly 5 or 6 enactments which taking care of a particular area of operation. So there is no major Social Security benefit for all the employees. Suppose a senior citizen who has retired, there is no Social Security for him. So that kind of benefits in India is not available, which was not popularly available for the most of the citizens in India. Now, after the Social Security Code introduced, these are the acts going to be repealed. One is Employees Compensation Act, that is Workmen Compensation Act, 1923, Employees State Insurance Act, Employees Provident Fund Act, Employment Exchange Compulsory Notification Act, Maternity Benefit Act, Payment of Gratuity Act, Cine Workers Welfare Fund Act, Building and Other Construction Worker Welfare Cess Act, and Unorganized Workers Social Security Act 2008. These are the 9 acts going to be repealed. In this place, the Social Security is going to hold the field. Now let us see what is a Social Security exactly means. Social Security means measures of protection afforded to employees, unorganized workers, gig workers, platform workers to ensure access to healthcare, provide income security in case of old age, unemployment, sickness, invalidity, work injury, maternity, or loss of a breadwinner by means of right conferred on them and schemes framed under the code. This is the definition given under the code. What is exactly mean by social security? It is a kind of a healthcare and income security and medical facilities in case of their sickness. Only three aspects are now covered by social security and for the people covered by the act. Now, if you change the changes in the code, in the Employees Compensation Code Act, Building Construction Workers Welfare Act, and Unorganized Workers Social Security Act, there is not even a small change. All those three acts copied and pasted in this code. No A, B, C also not changed. It's copied, pasted in respect of these three acts. Only total repeal was happened to the Cine Workers Welfare Fund Act. That was now totally repealed. There is no mention about what will happen to the Cine workers. Now there was changes, minor changes in all other acts. And now interestingly, one new amendment which was now made is for the purpose of counting the employees for the coverage of an establishment in the EPF and ESI Act, the employees whose wages are more than the wage ceiling shall also be taken into account. Now, till date, suppose 20 employees are required for the coverage under the PF. Suppose 18 employees below 15,000, and if 2 employees above 15,000, that 20 is not counted because there are no coverable employees. And now that portion is taken off. So the employee, if 20 is there, it is covered irrespective of their salaries. If 20 employees there, act applies. That is what now this code is now introduced. So in this, there are major inclusions in this code. First time, few new category of the employees were brought under the coverage. The code mandates the central government and state governments to form social security schemes for home-based worker. Who is a home-based worker means who provide services from their homes or any premises other than the workplace of their employers. 2 is self-employed workers who are not employed by an employer but engage in any occupation in the unorganized sector subject to monthly earning or hold cultivable land. And 3 is wage workers who are employed in an unorganized sector directly by an employer or through by any contractor and include temporary or casual workers, migrant workers, or workers employed by households including domestic workers. And gig workers are who are outside the traditional employer-employee relationship, such as freelancers, and the platform workers who access the other organization or individuals using online platform and earn money by providing them with specific services. These are the new category of workers who are being introduced under this code. Earlier, for them, there is no kind of a protection. Particularly in this social security code, only these 5 kind of category of employees are introduced. They are not there in the IR code, they are not in the occupational safety code, and they are not in the code on wages. Only in the social security code, these 5 people are kind of category of employees are included. And now for the first time, 2 new important additions were made into this code. One is an aggregator and a career center. Aggregator means a digital intermediary or a marketplace for a buyer or user of a service to connect with the seller or the service provider. This is an aggregator. And career center is earlier employment exchange, but now coined as a beautiful name, is a career center. Means an office including employment exchange, place or portal established and maintained in the manner prescribed by the central government, providing such career services including registration, collection and furnishing of information either by the keeping the registers or otherwise manually, digitally, virtually or through any other mode as may be prescribed by the central government, and which generally specifically to persons who seek employees, persons who seek employment, occurrence of vacancies, and persons who seek vocational guidance or career counseling or guidance to start self-employment. These are the earlier employment exchange duties are now given to career centers. Now hereafter the Employment Regulation Act is going to be replaced with this career center. So therefore all the earlier existing functions are now taken over by the career center. Now we will come to the Employees Provident Fund. This is what the slight interesting amendments were brought in this. Now, for the first time, limitation period has been introduced. Earlier under ESI Act, that limitation was there. Now, for the PF also, they have introduced a limitation. In respect of dispute arising under the Employee Provident Fund and Employee State Insurance Corporation, no proceeding can be initiated after the period of 5 years from the date on which the dispute is alleged to have arisen or alleged to due from the employer. Now we are facing so many issues with the PF department. They are asking records for 20 years, 30 years. Your project at Assam, Guwahati, bring those records. Those things are now going to be stopped because of the introduction of limitation part in this EPF Act. Now PF appeal may be preferred to the tribunal within 60 days on deposit of 25% of the amount determined with the concerned social security organization. So whenever a case has to be filed against the order of EPF commissioner, 25% is standard. Now earlier there was a discussion to the tribunal, either to waive or to reduce. Now the discussion is taken off. It is standard 25% of the amount is to be deposited with the social security organization, not with the PFF commissioner. It is to be deposited with the social security organization, which is now going to be established. I will show you in the next slide what is that organization. And certain other provisions are also deleted. Provision to review the order of assessment is now under section 7B. There was a provision to review that is deleted, and the power to claim escaped amount. The department was having power to claim even after the assessment. That was now taken away. Power of the tribunal to waive the deposit amount, that is also taken away, and schedule of applicable establishments are also taken away. Now, because of the removal of the schedule of applicable establishments, every establishment where 20 or more, the Act applies now. Earlier, there is a schedule for only those industries which are mentioned in the schedule are only covered. Now the schedules are removed. So therefore, wherever 20 is there, Act automatically applies. That is what under the EPF Act. So this is one new good introduction by the government, authorizing employees to maintain provident fund accounts. The central government may, on an application made to this by the employer and the majority of the employees in relation to an establishment employing 100 or more persons, authorize the employer by an order in writing to maintain a provident fund account in relation to an establishment. So the company or the organization have the power to have their own PF trust or somebody which they can organize in such manner as may be prescribed by the central government, subject to such terms specified by the scheme, but provided no authorization shall be made under this subsection if the employer of such establishment has committed any default in the payment of provident fund contribution or had committed any offense under this code during the 3 years immediately preceding the date of such authorization. These are the clauses which disqualify the employer to have their provident fund trust. Otherwise, where 100 or more workers are engaged by company, he can make a request to have their own provident fund account instead of remitting with the provident fund department now. So that's about the EPF. Now we are coming to ESI. Sorry. Now, under the ESI, the central government may frame a scheme for unorganized workers, gig workers, and platform workers and members of their families. Now, government started doing this for all the only for the, you can see this. This is only for the medical benefits. All these gig workers, unorganized workers, and platform workers, and for their families, the ESI benefit, that is medical benefits, are going to be extended. Establishment working in hazardous sectors to be mandatorily covered even one employee is engaged. Option is given to employees to become members even less than 10 workers. So basically medical facilities they want to improve, therefore certain amendments have been made. Now the corporation has a right to recover. If the employer fails to register or fails to pay contribution within the time and the corporation pay any benefit to the employee, it can recover from the employer after providing due opportunity the capitalized value of the benefit paid to the employee. But it can be adjusted against the payment of contribution and interest or damages. The said amount may be recovered as arrears of land revenue. So in case the employer has not covered some employee under the ESI within the time, and in such case he met with an accident or dies because of the accident, the ESI corporation, if he spends some money, that amount can be recovered from the employer, but it can be adjusted against the interest and damages. So the corporation don't want to lose anything. If they spend some money, that will be recovered from the employer. That's what ultimately it is boiling down. And further restrictions on the management are the liability of owner or occupier of factories, etc., for excessive sick benefit. Where the corporation considers that the incidence of sickness among insured persons is excessive by reason of insanitary working conditions in a factory or establishment, or the neglect of the owner or occupier of the factory or establishment to observe health regulations enjoined on him by under an enactment or for time being forced, or insanitary conditions in any tenements or lodgings occupied by the insured, persons and in such insanitary conditions are attributable to the neglect of the owner or the tenements or lodgings to observe any health regulations enjoined on him by under the enactments, then the corporation may send the owner or occupier of factory or other establishment or the owner a claim for the payment of the amount for the extra expenditure incurred by the corporation as a sickness benefit. And if the claim is not settled by an agreement, the corporation may refer the matter with a statement in support of the claim to the appropriate government. Now, if the sanitary conditions are not properly maintained, or there is no proper health safety measures are not being followed, then in case because of that any employee gets sick and the corporation spends some money on that sickness, that amounts can also be recovered from the employer for failing to provide the safety and healthy working environment. That is a new amendment now in this. And now that is what the continuation is. If any amount is calculated or determined, then the amount expenditure can be paid to the corporation by that company occupier or owner if it is proved that because of his negligence that the employee suffers the sickness and the corporation is required to spend some money on that, they can recover that amount. So for the first time, schemes for unorganized workers, gig workers and platform workers. The central government may by notification frame scheme for unorganized workers, gig workers and platform workers and the members of their families for providing benefits admissible under the chapter by the corporation. The contribution, user charges, scale of benefits, qualifying and eligibility conditions and other terms and conditions subject to which the scheme may be operated shall be such as may be specified in the said scheme. Now they are declared some kind of a provisions. What earlier existing under the ESI Act are now just with minor changes. The same thing is going to be extended for the unorganized workers, gig workers and other platform workers also. All the benefits under ESI. That's all about the ESI and EPF we have seen, bonus we have seen. Now we are coming to the gratuity. There is no change in the gratuity calculation and the method. It will be only added is clause D, which I have mentioned it in bold letters, on termination of the contract period under the fixed term employment. Under the IR code, a new concept of fixed term employment has been introduced. And the company can engage an employee for 1 year, 6 months or 4 months, whatever they want. But after the expiry of that fixed period, the gratuity has to be paid. That is 15 days wages has to be paid. Now that is only added now in the Gratuity Act. But for the working journalist, only 3 years is the limitation. For others, it is 5 years continuous service has to be rendered. But the working journalists, that is only for 3 years after completion they are entitled for gratuity. So this is one amendment brought in under the Gratuity Act. Pankaj sir, the questions are popping up.
No, sir. Couple of questions. In fact,
Ah,
we have about 10 questions. Okay.
hmm.
Uh, but again, Shruti Upadhyay wants
Yes.
example of home-based workers. Is it parallel to work from home?
Yeah. That's what. Language is different, but the nature of work and their intention is to protect the people who are working from home. The same thing, sir.
So, sir, what I would see is like Sarang Shah had also asked, what is the minimum time that may be granted to employer to reply to the query of union or employee? So I was just waiting for you to complete the session and then take up the question.
Another 10 slides are there for us with me.
Yeah.
So we are running at 7:20.
Yes,
So
sir.
hopefully we can complete and then we will continue all the questions.
Yeah, that would be far better, sir.
Okay. So what are the records the company or employer has to maintain and what are the registers to be maintained is also now mentioned under the code. An employer of an establishment shall maintain records and register in the form prescribed by the appropriate government electronically or otherwise. Earlier it is only physical record. Now the option is given, you can maintain the records either electronically or otherwise, and the details which are prescribed by the appropriate government. Now, all the things you can see the marking I have made in the red color. You have to maintain records, you have display notices, you have to issue wage slips and file such returns. All the earlier procedures are still going to continue. There is no relaxation for anything. Only advantage now is giving you can submit all these things electronically. That which was not there, earlier we have to maintain physically all the registers and other things. Now you are permitted to maintain all those things electronically. So therefore, the records maintenance, displaying of notices, wage slips, returns, nothing changed. So everything continues despite of many objections from the management, though they have given not any relaxation for this. So these are the maintenance of the records. Now the registration, even the gig workers or platform workers not automatically entitled for all the benefits. There is an obligation on their part also. Every unorganized worker, gig worker or platform worker shall be required to register subject to the fulfillment of following conditions, namely, he has completed 16 years of age, or such age as prescribed by the government. He has submitted a self-declaration electronically or otherwise in such form and such manner containing such information as may be prescribed by the central government. An application for registration should be in such form along with such other document including Aadhaar number as may be prescribed by the central government, and such worker shall be assigned with a distinguishable number to his application. Now if you see everything by the central government, the state government role in under this all the codes are very minimal. They have taken away all the powers for everything, every form, every notice, every procedure. The central government will notify. The state government have no role much to play in this codes. Therefore, that is the reason the state governments are not interested to make any rules regarding to these codes. So the registration has to be completed by the workers to get benefits under the code. And now that's what I mentioned earlier, a contribution to Social Security Fund. There is a new fund going to be constituted now. A Social Security Fund will be created for paying these benefits to workers, and it will be funded by the central and state government and also through CSR funding. So these funds will come from three sources. Aggregators who are digital intermediaries employing gig workers will have to set aside at least around 1 to 2% of their annual turnover, amount not exceeding 5% of the amount payable to worker for the purpose of this Social Security Fund. Hopefully, related rules may be announced in the coming days so that more clarity will be available and how the employers will estimate the total amount payable to a worker to set aside the appropriate amount. That rules have not yet come. The law also states that the central government may provide for self-assessment of contribution by aggregators, leaving scope for regulation. So these are the few things which the central government has yet to finalize. but the fund is going to be created for the benefit of all those gig workers and other platform workers, and for them, the fund will come from state, central, and CSR funding. So in our income tax purpose, a new provision is also likely to come for CSR funding. So as we discussed in the other code, the penalties are also hugely and abnormally increased. The code imposes enhanced and stringent penalties for the employees who fail to pay their mandated contributions under the social security schemes. Any failure by an employer to pay contribution mandated under this code would attract imprisonment for a minimum period of 1 year, extendable up to 3 years, and a fine of 1 lakh. Now it is only 5,000, 10,000, that is a fine. Now it is increased to 1 lakh. For employers who do not provide a prescribed maternity benefit to the employees, could face imprisonment for a period of 1 year and with a fine of 50,000. For repeated offenders under the code, the minimum imprisonment of 2 years, extendable up to 5 years, and a fine of 3 lakhs has been prescribed. So punishments are slightly increased, and imprisonment is also going to be mandatory for any kind of violation under this code. Now, in this code also, prior opportunity should be given before filing a prosecution to the management. The inspector cum facilitator or any other officer notified for the purpose of offence by the central government or state government shall, before initiation of prosecution proceeding against an employer, for any offence under the chapter, give an opportunity to the employer to comply with the aforesaid relevant provisions by a written direction, which shall lay down a time period for such compliance. And if the employer complies with the direction with such period, then no proceeding shall be initiated against the employer. But no opportunity shall be accorded to an employer if the violation of the same nature of such provisions is repeated within a period of 3 years from the date on which such first violation is committed. So within 3 years, if the offence is committed, no opportunity, directly prosecution can be launched. Otherwise, there will be a show cause notice to comply the provisions. If it is complied, no action. That is one new advantage for the employers before prosecution. As we discussed earlier, under this code also, there is a provision for compounding of offences. And one interesting point is the punishable imprisonment for a term of more than 1 year. So for the purpose of EPF and ESI, the central government authorized person can only be authorized to compound the offences. For the other purpose of offences relating under the code and rules and regulations, the appropriate government can be authorized to compound the offences. That means for the maternity benefit, for any building cess, for all any other provisions, it is the state government officer can compound the offences. Whereas for the ESI and EPF, only the central government officials are authorized to compound the offences. And the compounding fee is also now decided. In case of an offence punishable with fine only, the half of the maximum fine provided for that offence has to be paid as a compounding fee. In case of an offence punishable with an imprisonment which is not more than 1 year and also with fine, 3/4 of the maximum fine. So for two categories only, now the provision for compounding of offences is permitted. So that is also first time in this code, this kind of provisions are incorporated. Now you can see the application of Aadhaar. It has become mandatory for everything. The Aadhaar application is mandatory. An employee or an unorganized worker or any other person, as the case may be, for registration as a member of a beneficiary or seeking benefit, whether in kind or cash or medical benefit or pension, gratuity or maternity benefit or any other benefit, or for withdrawal of fund, or for availing services as a career center, or receiving any payment of a medical attendance as an insured person himself or for dependents, under the code or rules, regulations, schemes made framed thereunder, shall establish his identity, or as the case may be, the identity of his family members or dependents to Aadhaar member. So without Aadhaar, no benefit can be given to any of the employee or to his family members. To avail any kind of service or benefit under the code, these employees has to register with an Aadhaar number only. That is why recently, though the code of wages or the social security code has not brought into force, only this section was notified by the government of India that this section came into effect from, I think, 1st May of 2021. Only this section applicability of Aadhaar was made into force. Because again, because of the COVID, the migrant workers and the other workers are getting affected. To give some kind of a ration and some kind of a benefit under these social security schemes, they have implemented the Aadhaar, the only section so far implemented under these 4 codes. All other remaining portion has not been notified, but only this provision has been notified by the government of India. Now, even though there is no necessity or this is not the agenda for our today's discussion, I just want to give small hint about how the Factories Act is going to be changed. There is a small change in the applicability of the Factories Act. Therefore, I thought it is relevant for you just to have a glance about it. While the OSH code, that is Occupational Safety and Health Code, applies to all establishments having 10 or more employees therein, the specific chapters thereunder would apply based on the subject matter it governs. The contract labor chapter will apply to the establishment or contractor employing 50 or more contract workers. Because I mentioned it, because the number is keep on changing from chapter to chapter. And the factories chapter would apply to factories without the aid of power employing 40 or more workers, and if they are running with the aid of power, then 20 or more workers there. Such factories would also require a license in the same manner as required currently under the Factories Act. But factories having less than 20 employees but more than 10 employees will have to comply with the registration requirement under the OSH code. Slightly, the numbers have been changed. That is why I thought it is necessary for your information that under this code, different numbers are given for different chapters. That is one thing. Now, do we need to change the existing policies or procedures? Definitely you require now. It is not only the definition of wages that is expected to change. For example, the concept of who is a worker is now clearly defined. The term of employee is also defined clearly, and it includes a worker. A worker includes an employee, but employee does not include a worker. That is a new concept. There are few provisions such as that ones that regulate the working hours, overtime, annual leave, and that apply only to workers, not employees. Similarly, all IR code provisions apply to workers. Therefore, it is important now that every employer relook at their HR policies, organization structure, role, and the responsibility of every employee to understand the impact of provisions of the code and realign as required now because of the changed atmosphere. So this is all my presentation, sir. Thank you very much. I think I'm on the time. I was completed all my presentations within 1.5 hours. I think half an hour is left for the question and answer. So hopefully, without getting people, participants without getting bored, I hope
the very fact that 100% of the participants have stayed back tells us that it's not a boring thing. Sir.
Thank you for your patient listening, all of you.
Sir, we can stop. I think people who would like to note this address and mail ID can note, and then you can just stop the sharing. Sir, but by the time they are doing, I would like you to just give 2-3 minutes, sir, because some question related to us. Many of us start practice. Okay. Generally, it's 1 or 2 partners, or we have only 1 or 2 office boy, or 1 or 2 article clerks, or 1 or 2 employees. So, what acts are straight away applicable even to a chartered accountant office from the?
Oh, for you, for chartered accountant's office.
Yes, sir.
Sir, you require a registration under the Shops and Establishments Act.
Yes, sir.
That is the only applicable act for you. Like we, as an advocate, the same thing. But we claim that we are all intellectual people. Therefore, we are not doing any business or a trade or a profession. It's only a profession. It's not a trade or business. Therefore, we don't require any registration under the Shops and Establishments Act. But unfortunately, for the chartered account, what's happened is many consultants have also came in. So some person who qualified as with a BCom also claiming himself as a practitioner. So because of that, now the registration under the Shops and Establishments Act become necessary for a chartered accountant's office. So you have to register under that act, and as long as you are below 20, you don't require to follow any other labor laws.
Thank you, sir. We'll just take the questions. Sir, in between, you can just stop sharing so that people can see. Yeah, thank you very much, sir.
Thank you, sir.
I'm taking the questions, and of course, Jitendra sir questions where opinion is involved, I will take up at the end.
Yeah.
So I'll just because on this 50% rule,
Yeah.
and a follow-up question. One is people wanted a 50% rule, how that is calculated, and a follow-up question. Please consider this example where minimum wages as per state government is say 10,000. The employer has structured this as below: 5,000 basic salary, 2,500 as HRA, and 2,500 as special allowance.
Yeah.
So whether the employer is compliant with the minimum wages, in your example, you had given basic HRA and DA, and you said, I think it's a follow-up question to that.
No, sir. Now, if the minimum wage is prescribed by the government, if it is 10,000, yes, sir. And if the 10,000 is paid as basic 5,000, HRA 25,500, and special allowance 2,500, if we pay 10,000 rupees in whatever name or whatever manner, it is compliance. 10,000 is to be paid to the employee by any other manner. There is no dispute on that. That issue, that confusion is coming because of the Provident Fund Authority, sir. They are repeatedly saying and giving notices, the minimum wages cannot be split. That is the stand they have taken that created this kind of a question. But the PF authority, sir, this is a settled position of law. PF authorities cannot interpret the Minimum Wages Act. This act is an independent, PF Act is an independent, both are two different fields. So PF authorities can only say whether on the given wages 12% PF has been paid or not. That is their duty. Whether the minimum wage is paid or not is not their job. There are separate authorities constituted to implement that act. So therefore, if 10,000 is notified as the minimum wage, as long as you pay the 10,000 in any manner what you way you like, nobody can question it. That is the legal position in Ramakrishna Homeo Pharmacy case of Hyderabad, sir. This was decided by the AP High Court, Combined High Court. And this issue was also upheld by the Supreme Court in a Lingagowda Detective Agency. If required, I will give you all those details, but it is the settled position. If 10,000 is the minimum wage that is paid, it's all. That's there is the matter. Nobody can question.
And sir, I'm just taking one question from Jitendra Kumar. Notice period, he's talking about fines. Notice period recovery, will it be embraced by this new fine code and leave a challenge?
No, sir. Those are the new practices which have come into existence of these IT people have come into. Notice period. Suppose somebody has avoided and without giving notice or notice pay, leave the company has got the option to recover that by filing a civil suit. This code have not dealing with those issues, and there is no subject relating to that in this code.
So Sarang Shah asks, what is the minimum time limit that may be granted to the employer to reply to query of union or employee?
There is no, they have not specified what is 7 days or 10 days or whatever the times are. That may be come in the rules generally. The rules, once the state government makes the rules, that will come.
But till the time, can we just go with any, but till the time the rules come, can we say that this is the minimum time?
7 days is the minimum time, sir.
7 days.
And we can ask for extension of that in case if any further material has to be procured, we can ask for an extension of time.
And Satish asks, is it mandatory to pay gratuity if the employees completed less than 1 year of service?
No, sir. And for the first time now, the fixed term employees are now being introduced. in this code. So fixed term employee is for 1 year. Suppose I engage a salesperson for 1 year. That sales operations may not be there after 1 year for me, or my job or my contract may come to end. So at the end of the 1 year, I have to pay him gratuity if he is a fixed term employee. If he is a regular employee, there is no this payment of 1 year gratuity. It is after 5 years only. So for the first
And
time, only for that kind of category of people.
and this
Yeah.
5 years and the interpretation of 4 years, 8 months is also becoming some bone
Yeah.
of contention.
Yes.
So is it applicable for?
Can I give some explanation on that, sir? So
Yes, please, sir, please.
5 years means an year of 240 days, not 365 days. 240 days is an year as per the Gratuity Act. That 240 days includes 52 Sundays and 9 national and festival holidays, which is notified by the government. And any authorized leave, suppose an employee goes on a leave that is suppose sanctioned by the management, that is also his absence is to be treated as presence. So 52 holidays, 9 national festival holidays, and the leaves if any sanctioned. Suppose 60 or 70 days, you can take it off as authorized absence. Sundays, we can't ask the employees to come, therefore it's an accepted absenteeism. So out of 240, if the 60 or 70 is minus, that is roughly 180 physical working days in a year. Like that, 5 years continuous working give him the eligibility to claim gratuity. So 240 days per year means minus weekly offs and other things.
Thank you, because that is one confusion we are all getting.
Yes.
I thought I'll get it clarified from you.
Correct.
And I'll just take some more questions. Sarang Shah again. What will be the minimum age for employment in factories, trading firms? Anything specific for domestic servants? And I think this question has come post-corona for Sarang.
No, that kind of age restriction comes in factories only. Factories where hazardous works are being taken up, people below 14 years in hazardous industries cannot be employed. For other industries below 18 and above can be engaged. So only children cannot be engaged in any activity. That is the basic underlining.
Thank you, sir.
Yeah.
So, minimum employees mandatory for PF professional tax is a question from Sandeep Kumar. 2 different tax. PF is 20.
Okay.
Yeah.
Yes,
20 and professional tax, I think we start with first employee.
Yeah, even for one employee also we have to pay professional tax.
Yeah. I'm going with Raghupati Rao, sir. Whether a dispute can be raised under the new code in respect of unpaid terminal benefits, such as gratuity, etc., of an employee who left services in 2019.
Yes, he can raise that 2019 at that point of time, but the various other forums are available to him. So he can raise in the existing forum, labor court or a labor commissioner office, because till now 2021 also those forums are available. Once the code comes into operation, the labor court is not going to exist. It is only industrial tribunal is going to function to decide any disputes arising under these codes. So at that point of time, he wants to claim, he can approach the industrial tribunal. If he wants to claim now, there are various other forums available to him. So it is the option given to the employee, what choice he had, he can make that.
Thank you. So question from N. Satish Kumar. Sir, if we have 2 or 3 branches in different states, then are we required to consider total manpower for the applicability?
Yes, sir. If it is only a branch, then it is to be considered as one unit. If the branches are having independent balance sheet, independent profit and loss accounts, and it is registered as a separate entity, then it will be different. If it is only a branch, Hyderabad having a branch at Bombay, and the employees working in Bombay is also included in the Hyderabad count. So it will be one unit, sir.
And before I take Jitendra's question, one question in chat from Mr. Satyanarayana Malla is whether employee in a CA firm includes articles or apprentice.
No. Articles, the juniors, like we have internship people who are coming, they are the students. We are not paying any remuneration or a salary or a wage for them. Whatever we are paying is an honorarium. So that kind of honorarium is not a salary or a wage, and therefore they are not required to be covered under any of the provisions of the Act.
So, sir, I'm just taking questions from Jitendra.
Yes, sir.
I am not as knowledgeable as him, but I'll try to combine some questions and try to do it. So, in the general question, he asked, how different is India with regard to labor law in global context? And can we conclude that this is not a reform, but refurbished law?
Excellent. Very apt, very to the point. Exactly, sir. My viewpoint is also there. We have got the independence about after 70 years now, after 47. 70 years after also we are following the same old British made law. 1936 provisions, how can you made applicable in 2021, sir? 1948 law, how can you made applicable? And you just copied and pasted here. And you forgotten what is the required for the present day situation. As one of our friends have raised, notice pay. Where is the law on this? People are just moving from this company to that company, violating all the agreements, nobody bothered, and that poaching is more. So this kind of, these are the issues now every employer or a company is facing. The law is not answering on those issues, but simply going back to the old laws and still continuing with this. And meaningless pasting of so many sections, which is now redundant. That is what you are exactly right, sir. This is not a progressive attitude of the government to make the law.
And he just wants you to be an astrologer in asking on the effective dates for coming into force of the new code.
October 1st is the date they have notified, sir. The new labor minister has said that from October 1st they want to implement this. But this is the third time that kind of a declaration was made. Now, because of the corona and the companies are not doing, all the employers are facing so many problems. Maybe it may be extended for some more time, sir. Maybe in the next year only it may, if the third wave will not come, hopefully.
Sir, one thing from my side, under this new code where this 50% is mandatory, sir, is there any restriction on, now I'm talking about the new code where they are defined and they're very clear that on 50% of the wages, PF has to be done. Now, in this situation, sir, can I go with HRA as a balancing figure? Because now what is happening is the moment I keep special allowance as a balancing figure, then that it's not coming to 50%, it might sometimes go to 60%, 70%, or whatever it is. So what I do is 50%, 40% of the CTC, I put it as basic, 10% as special allowance, and I know these two form 50%. So never am worried about my wages going below PF limit. And I'll have HRA as a balancing figure, because here what happens is I'm not offending the PF department. I'm giving them on 50%. I'm not offending income tax department because whatever I put, 40% is the minimum, or 50% in some cities is the exemption what I got, irrespective of the amount put. So what I was thinking is, can HRA be taken as a balancing figure, and even if might go up to 60% of the CTC or 70% of the CTC also.
Absolutely right, sir. There is no problem. But only issue which you have raised is 40% is basic, 10% is special allowance.
Special allowance.
That is the issue. So special allowance, basic and DA should be 50%, not the special allowance. So special allowance also you can take out. You 50% you call it as a basic. On that, you start paying PF and ESI.
But in the inclusive items, special allowance is also there, no? Basic, the wage includes basic, special allowance and all these things.
Basic DA retaining allowance is the three
Special
items,
allowance,
50% has to make, sir.
uh,
So basic DA and retaining allowance, those three
okay.
components should make 50%. Rest of the 50% you can call it by any name.
Any name, it does not matter. But the moment I put it as special allowance, it has to be added for PF.
PF. Because you must have seen that recent Supreme Court judgment in 2019, any allowance which is universally, normally and ordinarily paid across the board, across the company, that attracts PF. So that still is there in the minds of the PF people. So therefore, any allowance which is beyond 50% also, again, in these exemptions, it will add it back to the basic.
Basic.
So instead of calling it as a special allowance, you made it 50% basic and DA. Remaining 50%, you can pay whatever manner you want.
Right. Thank you, sir. Sir, last one question.
Yes.
This PF trust, they are encouraging PF trust. I know. But what happens is interest payment is mandatory. And there are a lot of restrictions on the way amount in trust can be invested. And the way they put restrictions, I'm sure we'll not even be able to earn 7%, 7.5% on our amounts. And if we keep some administrative expenses and the mandatory auditing, I think, is it advisable to have our own PF trust, sir? Because PF office is doing wonderfully.
Yes, yes. Absolutely, you are right, sir. There is no need of going to the individual PF trust. As you said, a lot of restrictions on that. And you can't invest in the any other pattern contrary to the pattern decided by the government, and that will not give you the interest. And many of the investments which we have made, that companies have also went into financial problems, and then the capital and corpus was struck there. So therefore, it is not advisable to have that kind of a trust. And what unofficially I can, off the record, I can say is those restrictions also they want to reduce.
So two questions, because Sunkara Kranti is applicable, you gave as 1st October and probable increase. Okay. I'll just take two questions from CAK Hanmanlu. He's a very senior chartered accountant and close power man to BJP. So maybe he will send some information to powers that may be through him. So why so much complaints for employers discouraging entrepreneurs? Is it not against ease of doing business? That's what we discussed before. And why not more responsibilities, accountability, commitment for employees also?
Exactly, sir. In fact, I have also made that point of view while my presentation also. It is not encouraging the ease of doing business, and what the startups and small people will do, MSMEs and all other things, what kind of advantage they are getting because of so many further restrictions. Already they have so many restrictions, and now they are given further restrictions, and it is not in the good spirit for the encouragement of industry. And when the one side they want to attract the foreign investors, they want to retain the investors here itself. Don't go. Every state is also fighting for their investors. Come to my state. Come to my state. So this kind of in a atmosphere where the industrialist is given more priority, these kind of laws will make more discouraging, and it is put an hurdle for the growth of the industry also, sir. Honestly speaking, you are right. Your point is 100% right, sir. You is right. Government is not considering that, unfortunately. The other view, just my point is, while drafting this code, sir, no person from the industry, no person from the trade union, no stakeholder was involved. It was the only retired IAS commissioners or officers. They have simply drafted. That is why so many copy pasting has happening. They have not involved any other person who are actively involved in this business or in the practice or somebody. All the retired people, they simply sit as a committee and then decided this, and government also blindly followed that. So that is the basic problem.
So, sir, we are at almost 4 minutes to start, and one of the excellent and more required presentation. Friends, uh, I'm not that qualified to give a closing remarks for what Niranjan sir has started,
No,
but
there
one
are
thing.
few more questions in the box at chart. There are 18. There are people showing
No,
some.
no, that is only some excellent presentation and all also taken. One request is for this thing,
Yeah.
our to give the share the PPT and all, which I answered. So I was answering the chat side by side, and there's no question left either in Q&A or in chat box. Huh? It was
Okay.
an excellent presentation. And only thing is, yes, definitely, friends, we need to open our eyes and keep an eye on these acts also, because definitely the running of the business may also get affected because of the new code of wages and all which is coming. And it might become mandatory for us to take care of these areas, as when an employee or any union takes an industry to court, then our non-performance may also again be brought by the so-called uh, media, okay, who are just looking for something negative against the professionals who do a lot of good work. So thank you very, very much, sir, for your excellent presentation. And really, we would allow to have this as a physical seminar where we interact with you physically also. So let us hope this corona ends. But in between, on a virtual seminar, we present you one virtual Thanksgiving certificate,
Thank
sir.
you very much, sir.
Uh, this is the best.
Very valuable certificate, sir.
Thank you very, very much, sir. And we'll ensure that this reaches your place very soon. And thank
Thank
you
you, sir.
very much. And on behalf of Hyderabad branch of SARC of ICA, it is my privilege to thank CA Niranjan Rao, sir, and all the 141 delegates who were there with us till few minutes back. I know that the cricket match is starting, so in just last 3 minutes, some of them have left, or maybe, but excellent session. Thank you very much. Thank you everyone for being part of us. Thank you,
Thank
sir.
you very much, sir, for giving me the opportunity. And thanks, participants. 100. You have scored century.
Yes, sir.
Without looking
So
at cricket match.
140. Thank you very
That
much.
is a great participation. Really, the chartered accountant spirit you have exhibited. Very kind of you. Thanks for all your time. And again, when there is a possibility, we will connect again. We'll deal with the other few codes also when we have some
Yes,
time for
yes.
this.
And hopefully, I am just on behalf of all the members, I am already putting a request to you. Once the code of wages is applicable, hopefully we'll have a physical seminar, sir.
Definitely, sir.
Thank you very
Pleasure.
much.
Anytime,
Thank
sir.
you.
Thank you very much,
Thank you,
all
sir.
of you.
Thank
Thank
you.
you, sir. Thank you.